Welcome to Business Bites. In this week's episode, we talk about money.
Hello, we're going to be with Graham Bell again today, and the subject we're talking about is profit, that wonderful word, profit. So, Graham, good to see you again.
Good to see you too, Rick.
And profit, what's the meaning of profit? What the devil's that all about?
Okay, profit. So profit is what a business needs as its lifeblood to continue on. And basically, after you had the income from your customers, deducted the operating costs of running the business, then profit's what's left over on a very basic scale.
Pretty good, that's pretty concise. So, why would we need profit? Why do we need profit in a business?
Well, you need to think about all the things that a business uses money for other than its day-to-day running costs. So the operating costs, rent, electricity, advertising, they're all running costs. But business does need money for a variety of other reasons. For example, if you're a sole trader or a partnership business, you need money for yourself to live off. You can't pay yourself wages, therefore you're going to need some profit to be able to give yourself some money.
Absolutely.
There's about 3 or 4 other key categories that you would need profit for as well. For example, if you took out a loan when you first started the business and want to repay that debt, the actual interest part is an expense, but the actual debt itself needs to come out of profit, so you need some profit to repay that debt. Another important one is about the upgrading of plant and machinery. So often businesses will start with enough plant and equipment to get by to operate the business, but have a wish list of things they'd really like to have if things are going really well. And so you need profit to upgrade your plant and equipment. And sometimes people get a little confused with that one because they assume that that's a tax deduction. Normally the tax department will only allow you up to about $300 to replace an item. Beyond that, they want you to consider it a capital asset where you buy it out of profit and then depreciate it over its life. Another important category to consider is the longer term. So it may be that your industry is seasonal, cyclical, or just making provision for the equivalent of your retirement fund. You might want to have some money that you put aside for that. So that might be another category that you have under your heading of profit.
Wonderful. So it's more than just the day-to-day running a business. It starts to spill over into areas of life and also the long-term, I guess, viability of a business through those capital elements, which is important. Yes. It's a vague thing for many businesses in many ways because they get stuck in the day-to-day issues of just cash flow and running the business. But so how do you assess profit? Where do you go through the process of being able to identify it and making sure you have some?
Yeah. Well, it should really start at the very early stages of planning the business. When you're doing the feasibility study and you're predicting what level of sales you're going to need so that, as we said, profit is what's left over after the running of the business, after the expenses. Therefore, that sales figure, that income from the customers needs to be big enough to allow for all these other items that you need the profit for.
So specifically, what tools then? What's the ways we measure profit? What resources do we have to engage to be able to say, yes, clearly for this week, this month, this period, I'm in profit, I have profit the business to do all those things you mentioned?
Well, as we mentioned in the record keeping section, a good record keeping system will help record all the activities of the business and is a way of putting in all the expenses that the business incurs as it's going along so you can get some reports back. So I guess in a nutshell, I'm saying a good reporting system, a good computerised accounting system within the business should be able to give you the answer to that.
Is it possible to have too much profit or maybe too little profit?
Well, one of the considerations of profit is that it's going to incur taxation. So people do tend to sometimes get scared of making too much profit, thinking that it's going to put them into a higher tax bracket and they'll have this big tax liability.
Yes.
The reality of the Australian taxation system is that you always end up with at least half for yourself, so it's still not such a bad scheme anyway. And the other thing is consider the other side of it, that if the profit is below your expectations and then you don't have that money to repay debt, to upgrade the plant and equipment, to reinvest in the business in all sorts of manner of things, then the quality of the business, the quality of customer service that you can provide is probably going to suffer.
Wonderful. So it's an essential thing to focus on along during the course of the business, not something to be avoided, which can happen from time to time.
Absolutely, like the lifeblood pumping around your body, you need profit in a business. It's very important.
Fantastic, Graham. Thanks for your input again today.
It's a pleasure, Rick.
The amount of time that you have to invest in your business.
The fear.
The worst thing is the extra time it takes to administer the business.
The worst thing about running my own business is being the boss.
Making sure you've got enough work on for everybody you employ.
It's about juggling your own time and being organised.
And having to make my business work, not just having money coming in.
It's a risk. Probably not having enough holidays.
I think the uncertainty at times.
Having to wear all those different hats.
You can't make too many mistakes. At the end of the day, you've got to pay your bills and you've got to pay your staff.
It gets lonely sometimes. I miss the team that I used to have.
Being responsible for my own money.
The worst thing is there's always other things I'd like to do, improvements I'd like to make, and other opportunities to change things.